My style of trading, for those of you that know me, is price action, harmonics, ratios. Um, I focus more on the price action. I don't use any indicators. I don't use anything. I also want to say that, I'm not here to push anything or to sell anything. I have no interest in this at all other than to try to help people find a better way to trade, a clearer way to trade. This is very difficult for a lot of people. And the hardest part about trading is not a strategy, it's conquering those emotions. Those emotions are always going to be there. They're there for me, they'll always be there for you. You just need to learn how to exercise mastery over them. Understanding that the emotions are there, understanding that they're pushing you to take an action that may or may not be in your trade plan is something that you need to step back from and say, hey, I know I want to close this trade because I'm up 30 points and I just lost 20 on my previous trade. But Mastery's coming in and says, no, my trade plan says that I need to do nothing until something happens. Another thing about a trade plan, your trade plan should be conditional on price achieving something. It shouldn't be open to interpretation, because once you leave something open to an interpretation, the emotions are going to take over and help you make that decision. And it usually is going to be the wrong one. And until you contain those emotions, it is better to have a trade plan that is based on price achieving something. And that's not open to interpretation. Either price did or did not get to where it needed to get to. The candle either closed or did not close the way it needed to. Those things are mechanical, they are objective, and they're not open to interpretations. If you have rules or conditions within your trade plan that are based on those principles, then the emotions are going to be easier to control. Okay, you just then need to exercise discipline to be able to follow those rules in spite of those emotions. So coming in today's market, we see that we have pretty large swings to deal with. This has been the norm these days. We can see a lot of small candles pushing up here with really good buying pressure in them, closing near these highs. These are the buyers that are very strong, pushing price higher. And then we see that as the sellers push back down and force that correction, we can see one of the things we want to gravitate to is, where have the buyers come in? Where have they come in to make a difference? And that was here. The sellers came in to attack, and the buyers came in and attacked right after and pushed to new highs. So what happened when price revisited that area? We can see that the buyers tried to come in, and the sellers immediately absorbed them, tested the lower area of this little range here, and the sellers got past that. Okay, the buyers tried to come in right where they should have, and again, they got eaten up. And then again, a little lower, we can see that the buyers were all over this zone here. The buyers tried to defend. They were just not strong enough to be able to come in and overcome that. Okay, so as they got to that swing low and pushed the buyers into having their backs against the wall, we would expect the buyers to really come in there because they have been invested in this way down. We see a bunch of little candles. Coming back to the candles, I use tick charts. And to those of you that know why, and some of you that don't, I'm just going to explain it very briefly. A tick chart is based on transactions. So every single one of these candles has, in this case, 377 transactions. So why 377? It's a Fibonacci sequence number. I always use Fibonacci sequence in my tick charts and obviously in the ratios because there's relevance. There's mathematical relevance to Fibonacci in everything that's around us. You can all research that on your own time. Leonardo Fibonacci. Anyway, these candles all have the same amount of transactions. You would ask yourself, why are they different size? Well, because participation in those candles between buying and selling leads you to a conclusion as to who's stronger, who's not, because it's the same amount of transactions that we had in this candle than we have in this candle. But they're different because this one's a more balanced mix of buying and selling, where this one's more of an imbalance. Less sellers came in here as opposed to buyers. So that gives us really good insight from a bar by bar perspective, who's coming in, who's not coming in, who's getting absorbed, and what areas are being defended and where that liquidity is. So I think that, in my personal opinion, the tick charts offer a significant advantage over time-based candles or range candles or any other candles out there, because they really give you good insight as to who's coming in and where, because it just counts transactions. Okay, so it becomes a really nice way to see the absorptions, to see who's coming in where, and to see who's just not showing up to fight, other than a candle that's just bullish and you really don't know much because it's what happened within a period of time. So enough said on that. Let's come in and let's create a framework for price. What do we expect? Well, we expected the buyers to push into a higher low and then a new structure high. That's in question right now. The buyers are struggling. Sellers are defending their territories and scoring wins on the way down. And then now the buyers are getting a little more serious. Let's see if they can push above this. I don't want to rush into a trade at the moment. I just want to see price. One, the open's going to have a lot of resting orders, a lot of people trying to get in and get out. Let's let that dust settle and let price start respecting some of our expectations. All right. So overall, we expect a higher low and a new structure high. That seems to be an issue for the buyers right now. They're trying to defend their zones, but they're really not getting anywhere. They're really not scoring any wins. It looks like the sellers may be able to push down, and immediately we can just now start coming in. We have an expectation of a new structural high, so our buyers should be long. We'll see if the buyers can be able to achieve that. They would have to get above this area that they have not been able to get on. So let's just create that framework around price now. Let's blow things up a little bit here and understand that the sellers are what? They are defending this territory. We can see that we have good selling absorption here. We have an absorption rotation here. We have another one here, another one here. The buyers tried to absorb here and they got absorbed. Price scored a new low. Price came up here again. We can see that the buyers stopped really absorbing. We don't see much buyers trying to come in here. What we see is the sellers attacking after the buyers. That's sellers coming in. Of course, price is going to move from that area. We can see the contrast difference here between here and here, right? As the buyers were able to push back in here, we can see buying pressure in all these candles, and we can see the sellers coming in and absorb, and the buyers absorbing right after. This is not something that you should see in an area of resistance. So when you see the buyers absorbing at resistance, you can expect that area to possibly fail, okay? No, this is not an absolute thing. So we see that now. The buyers are absorbing here, okay? And the sellers are trying to absorb. This is a statement by the buyers. So if price comes down here and comes down to these lows, we can feel comfortable in taking along. The buyers are spoken in the immediate order flow and have produced a new high here. So this is what I was, what I would like to call an emerging order flow. In the immediate order flow, where the buyers retested an area here that the sellers have aggressively pursued and attacked, and the buyers came in to score a new high. So this is price action speaking to us that the buyers are willing, able, and capable to possibly take price higher. All right. So again, I want to say also that this is the way I trade. This is the way I do think. These are not any trade calls. Whatever trades you decide to take is on your own risk. I am not here to give any calls or to push anything on you guys. I'm just showing you how I read the chart and the actions that I take based on that. All right. So now that the buyers have spoken to me, I'm going to look for an area that has the liquidity that I'm looking for. And I look for liquidity and price through absorption. Absorption is, somebody come in and the other side coming in to kick their ass. Like here. The sellers tried to do it below, and they weren't able to. The buyers tried to do it from above, and so on and so forth. We can see that this area here, and the concentration of that happens to be right down here. So I'm going to put a limit buy order around 799. And I know it's getting attacked now with a little bit of what appears to be strength, but we can't always say that that is strength. One of the things from a price action standpoint that we need to consider is, does somebody need to defend that territory? Does somebody need to defend that ground? you know, and in this particular case, the buyers achieve something. The buyers don't really need to do anything until price gets back into this area. All right. So this is the area that is likely going to be defended, because ask yourself, we're retail traders, we're trading one contract, 10 contracts. You know, when I used to trade hundreds of contracts, I used to need to find that liquidity, right? Where are the 500 contracts going to be filled? Okay. And that answer is, you know, where the liquidity is. And the big boys have the same problems. They need their orders filled. You know, so it's important for us to understand where that liquidity is and to position ourselves in a place to compete. We can compete against the big boys. However, we can go in and follow their lead. Okay, ve con mamá. I'm sorry, guys. My son came into the office. Sí, ve con mamá. Hey, welcome. He needs to go to the bathroom. Sorry, guys. All right, so we see that we have a good buying absorption. The sellers try to reattack and the buyers absorb them. Let's see what happens in this area. Understand that once you get into the trade, you know, all the decisions have been made. There's nothing that you can do. Think about a worry. You should have already accepted the win or the possible loss, whatever that is. Okay. Now, the only thing that takes control of this trade is trade management. And whether we win or lose here, it does not matter, because it's about risk reward, it's about process, it's about consistency, it's about doing everything that we need to do to maintain situational awareness and follow our trade plan. So got stopped out here. Like I said, we don't care. We want to see now the sellers push past this area here. We're going to be looking for shorts in and around the area of liquidity. And for the sellers, that's going to be a little higher here. We see we're going to make an adjustment here on the sort of have like an area running into an area here. Now, overall, in the grand scheme of things, we've had an expectation failure, okay? And we should be looking for a higher low, new structure high if you're a longer term position trader. From an intraday trading standpoint, that's not something that we're looking to capitalize on or even pursue, because it doesn't make any sense. From a range standpoint, what we're looking for is price has spoken. The buyers had spoken here. They did try to defend, but they failed. And it looks like the sellers picked up on that underlying strength that was here, and the buyers just fizzled out. So let's look for a trading opportunity to the downside. I'm going to be looking for a short around 845. And it's important to understand that it's that simple, guys. You know, don't carry the baggage of the last trade in with you. Don't, you know, think that the market is outsmarting you. You know, it's not about that. It's about what is the next expectation? What is the next area of interest? You know, where am I looking to participate? It's about frequency to get to expectancy. It doesn't mean that we're going to chase price. It doesn't mean that we're just going to get in anywhere, because that also leads to issues on the trade management side. Those of you that have been following me for a long time, always heard about the stop goes above or below the swing high. I've been trading the last few months with a 50-point stop because of the size of these swings. It doesn't make sense from as an intraday trader to have, you know, a couple of 100-point stop. This just doesn't make sense to do that. So I've been forcing the zones to hold, depending more on accuracy and process versus the larger stops. It's been working really well. It has brought down my win rate into the 60 percentile, 65, 63. But the risk reward is about 3 to 1 or better. So, you know, mathematically, it works out very well. And we're not rescuing trades. We're not adding risk to a trade. We're just taking the smaller hit and then making it up on the winners. It's from an intraday standpoint, seems to be a really good formula for these markets that have such wide. You know, the other Patrick, a friend of mine that trades very well, also may or may not be here. He uses a percentage of his account, and depending on what his stops need to be tells them what position size, whether it's one contract or two contracts or whatever. So that's another way of doing it. But I'm not here to second guess the market or to try to, this is too much strength or, no, this is where I need to participate. This is where liquidity is. The market has spoken. And it's really that simple. It takes a lot of the fear out of it, a lot of the unknowns about it, and that's the way I have found to want to pursue the markets. My expectation here is for a lower high and a new structure low. Looks like the market's a little aggressive, may take me out again. And again, I don't really have a worry or care about that at all. We'll see what happens here. Looks like I want to be stopped out again. Ideally, we will put our stop right above this area. I don't want to add risk. Again, I have a mathematical formula that I'm following, playing on the risk reward. I'm not going to cut into that risk reward. It's exactly where I want it. This area is either going to hold or it's not, and that's it. And you'll see that overall, following process, will have usually a positive outcome for the day. You guys still there? You guys still hear me?
Yes, sir.
Yes,
Right, so let's see what happens here. We had a very deep correction, deeper than expected, on what appeared to be strength. Don't know if that's real strength or not. The sellers came in where they needed to. So on our expectations, when we look at order flow expectation, we tell ourselves, oh, we expect a shallow correction, we expect a deep correction. Those things have to be adjusted to where the liquidity is. You got to ask yourself, oh, I expect a deep correction, but there's strong liquidity somewhere, before that. You have to consider that that's where price is going to ultimately correct. Vice versa, if you expect a shallow one and the liquidity is on the deep side, that's where you have to put your limit order. Consider that price may get deeper than you expected, because that's where the liquidity is. And who moves the market? The big players. What do? Trade big orders, right? Where are those going to get filled? That's what's going to determine what happens here. So we need the sellers to come in. We need them to get past this area here. It looks like the buyers are coming in early. Looks like we may get a hit here, and maybe not. We'll see. The market seems to be a little back and forth. A lot of you may be tempted to say, oh, why don't you just put your stop above that high? No, because price shouldn't get there. If price gets past that, then, then we have to change sides again. So it's not about the fear of getting stopped. It's about, if we get stopped, it's next. It's no big deal. We're just going to sit here and watch what price does. We know that the buyers absorbed here, so we have a higher chance of probably getting our butts kicked on this trade than not, and that's okay. Now, that doesn't mean, oh, if we've lost 2 trades, we're just going to slow down now, wait for things to settle in and wait for it. No, we are going to process our chart and have our next trade lined up. Right now, it is still to the downside. That doesn't mean we're going to re-enter again. We're going to wait a little bit here and see if the buyers defend this area. I don't want to get long because price has not gone above this area yet. Any questions? I don't know if people are typing or not. I hear a lot of noises, little blips and here and there, so I don't know what's going on. Yesterday, the day started out the same way. You can see on the chart here, had a losing trade here, a losing trade there. I expected the market to push higher. I should have been more aggressive and gone short after here. I felt this area would hold, and it did for a while, and then price came back and took me out. And from that, we started going short. So I missed this entry by a little bit, missed this one by a little bit, caught this one, and ended up with a really nice day. Usually the first trades of the day closer to the open tend to be a little more problematic because of that, the dust hasn't quite settled yet. Nobody's really asking anything, so I'm not sure if things are working or not, but we'll just press on. So the price gets above this area here, we'll look to get long again, somewhere around the area where we got long before, down here. So what's happening in the bar by bar? What's happening in the price section? We're getting into an area here of resistance, and who's winning the battles there? You know, we can see that the sellers, the buyers are absorbing here in this area here. We can see buying pressure in this candle. We see a candle that tried to trade below its open a little bit. The buyers closed strong. So there's intent here to take price higher. The sellers came in to absorb, tried to force a correction, but the buyers are already trying to absorb, and the sellers are having to spend extra money to absorb the buyers. It looks like the buyers are going to take price higher eventually.
Absolutely. Absolutely.
All right. Thanks, Mitch. Thanks, Max. Okay, so we can see the buyers are, absorbing this area of resistance. So it looks like the buyers are definitely the ones that are in control right now of the liquidity battle. Sellers are trying to reabsorb them. They were able to force a correction. Now let's see where they take price.
Form on the market right when I make calls, I'd probably need to shut down. Get it down. No thanks. I don't want you guys flexing. Not going to be fun. All right, so we have a red candle here, right back to S1. Still waiting, shaking and baking. We've got 15 minutes of morning range set. VIX still on a nice steady incline to 3608. Now let's take a look at XLF. XLF right now, 3608, and maintain its upward posture, but jumping back and forth in line range.
So we got the news on or something? So the buyers trying to absorb in their area here.
Already be priced in, or will the market be waiting for it to come out of buy?
Buying pressure in these candles. These are the buyers trying to come in to absorb. It's a little unclear to me right now who has the absolute strength of the market other than the buyer's intent to take price higher. The sellers are fighting them off right now. Buyers defended this area here very nicely, got up here. We can look to the left and see if there's longer term support in those areas, in that area. We can see there is here and here. So they reacted to the zone. And you don't have to go 100 years into the past to see where the strongest level of support are in the back. You don't have to go to the 36-year chart, the 1 month chart, or anything like that. Just look for the violence in the chart that you're looking at, because violence means more liquidity. More liquidity means a stronger area of support. So wherever you see violence, that's where the longer term areas are. Do you need to identify them? Well, that's up to you. You can identify those as supply and demand areas, and the short-term stuff like this can be support and resistance. Is it necessary? If it adds, value to you and your framework, go ahead. I will caution you not to be drawing a whole bunch of things in your chart that's just going to make it harder for you to make clear, decisive moves in regards to following your trade plan. You draw a huge red crazy box here that says, that's a bulletproof area. You shouldn't, sell the market. Well, what is the expectation? The expectation puts price past that, and then it will probably fail, right? Don't overwhelm yourself with too many things to process and things that are just going to add to, an emotional trading session. ATG says he thinks price is obeying the long-term order flow. It may be. It may be. The sellers now are the ones that are defending their zones. Buyers defended their zone here, and the sellers came in to defend. So this area was very strong. The longer term expectation had not finished. So one of the things that we can do and look at here is, what it is the harmonic expectation here. Where should price come in to find harmonic exhaustion? Where is the ratio exhaustion area? Is there a play here on a D entry, C buy in line with the overall expectation? That would be down here in this area. Is there structure there? It's just past the structure area. Fortunately, I got taken out here by a couple of points, but that's the way the cookie crumbles. Don't get upset if you don't get filled by a couple of points or you get taken out by a couple of points. Understand the overall you were correct. And when markets have a lot of energy like they do these days, price is going to go past, certain areas. And it's more challenging to trade with on tight margins, like a tighter stop. A really nice trade here. But as you can see, we don't get upset. We just focus and next. Now we can see that this strength that the buyers had here, this is intent to push higher, didn't really pan out for them. They tried to defend their lower zone. They failed. Price went below it, and now the buyers are forced to defend their lower levels here, which tells you that the sellers are the ones that are overall in control, and the shorter term expectation may likely play out. We don't necessarily want to get long here, because the expectation on the order flow that we're trading is to the downside. Overall, price is kind of moving sideways. How do we know that? Well, we have an area here that's been visited 1, 2, 3, 4 times from the bottom, 1, 2, 3, and price is staying within that framework. So overall, this market is kind of range bound with an expectation right now on the immediate order flow to break to the downside, and on the longer term order flow to break to the upside. So the market may be somewhat confused as to where it wants to go. We can see we have absorption that made a difference here. A lot of buying absorption didn't go anywhere, and the sellers just very easily got past all that. That's a sign of strength. That's why I wanted to join the sellers here. My stop, unfortunately, fell inside the vulnerability area of this other here, but I'm not moving my 50-point stop. It falls where it falls, and that's it. You can appreciate how we aligned ourselves, despite what the long-term expectation was. We align ourselves with that here, where the buyers did have the strength, did show they just were overtaken here. And once the market spoke, we got short in the area of liquidity. Price went to the second area, and then it's playing out as we speak. So hopefully the sellers will go on down to make a new low here, and then we'll catch the rebound here and look to get short somewhere around 8:30, 8:30, or yeah, that's where the liquidity is. We can also treat this as a, if the buyers do come in here and do come up to this area, we can join short, because the expectation is still alive. You can treat it as you were short and you got to the break even, price took you out, re-entry. So I'm going to put a limit order in at 854. to the short side, as I now have a slightly better indication that the sellers are the ones that are in control of price movement, and the buyers have been trying to weaken them unsuccessfully. We expect every one of these zones to hold to some extent. If the expectation pushed price past that, then we would expect that area to eventually fail. Like, we expect the immediate order flow to get past this, so we expect this area to eventually fail. So as price visits these areas, we have to ask ourselves, okay, who's winning the absorption battle? Who's coming in and who's being eaten? You know, and that will give us insight as to whether that's going to play out or not yet. You know, just because you don't see what you want to see there, it doesn't mean that it's not going to fail or that it will not fail later. Okay. Expectations play out a lot more than they don't, so we have to keep that in mind. That's a big number to trade against. We don't want to do that to ourselves or to our emotions, right? Because if the expectations play out, you know, 60, 70% of the time, and 70% of the time is what it usually is, trading against that, what do you think that does to your emotions? Putting yourself in a position where you have a 30% chance to win versus, you know, the expectation. Don't you think that's going to cause a greater state of emotion in your decision making? Most probably it will. I don't want to get long here, you know, for price, expecting price to get up here, because price may not do that. And I'm expecting price to get past the zone. And I can see that the sellers are absorbing the buyers here. So, you know, this area has issues for the buyers. It's likely going to get past this. So because of that, I don't want to be gun-ho, super aggressive. I'm a trader. I need to be in a trade at every single minute of my trading session. No, you just need to make good decisions. That's the only thing as a trader that you need to do. So notice we said that this area, you know, is expected to fail. We see that the sellers are absorbing the buyers here. It will likely fail. I don't want to put myself in a situation where I'm going to get long here when I see, one, my trade plan doesn't have me getting long here. Unless I'm trading the long-term order flow, and I'm not, then I don't need to be looking for a long here. And if I was looking for a long, it would be past that area into this area, which would make sense on the expectation. On the shorter swing here, that's expected to come near the 127. So we have a longer term, shorter term harmonic into the 127. So the only thing we really don't have here is great structure. I would suggest opening up one window for watching Mr. Pip's live stream and one window for the text chat. Also remember to mute your mics when you're not talking to keep nice sound quality. Excellent. We're just gonna be a little patient here. Let price do his thing. Let the expectation play out. Know that we were accurate here on the entry. My stop got hit, which I don't care about, and it would have been an amazing trade. But woulda, shoulda, coulda, right? Let's see. Right now, we'll be at a break-even point at 167. See, if Patrick got into this trade, he's still in it. Notice we were able to see before price even got here that this area would fail or would probably fail, and then we used the bar by bar to help us see that. You know, kind of the same thing here. The only things that the buyers gave up. The sellers were the ones that were ultimately in charge. You know, so sometimes what appears to be strength is just that nobody really needed to defend that, so it was allowed to happen. This year, you know, threw me in a little bit for a loop, but the expectation was still for price to make a low below this. That's why I didn't want to go long here, just because it looked like strength here. Notice how I was not able to allow price to bully me into what could have been, or what looked like a reasonable trading opportunity to the upside. Okay, so now that price did make that low, did it complete the down here? So this is an area, a high probability area of price correcting back up. We have two ABCD exhaustion points. We have ratio exhaustion on a larger swing. The only thing we really don't have here is a good structure to the left. So therefore, you know, it may or may not hold. So where do we plan our trade to the downside? You know, is it reasonable to expect price to get all the way back up here? No, it is not. So let's look for other areas where price has shown an interest in selling. So we see here, we see here, we see here, and then the sellers did in fact come in here to push price lower. Okay, so once we do correct, we have decent momentum. Projection so far hasn't really been established yet. They're working on the projection, right? We have from here to here, from here to here. We would expect something to happen here. The absence of structure may have price push a little bit lower. I see some absorption here, and a little bit here, but we'll see. Exhaustion is exhaustion. So you see, guys, you really don't need any indicator, any oscillator to tell you whether the market's overbought or oversold, and the market's in exhaustion or not. You know, the market strives for symmetry. Ratio extensions are mathematical exhaustion. You know, 127, 138, 1618. These are all exhaustion territories. This is oversold territory in this case because price is coming down. So this is oversold, okay? And we expect that exhaustion to lead way to either profit taking or some buyers getting in. The absence of structure may cause issues with that, but that's what we expect. Doesn't mean we're going to get long there. Right now, we wouldn't. If we were looking to join this longer term expectations, this is definitely an area of interest. Although the absence of structure puts us in a little bit of a predicament with our stop placement and where ultimately this will ultimately correct. On the short side of things, this is the area that I can make sense for me to target, is 750 to the downside. We would expect an overall mid to deep correction from here. You know, and how do you gauge whether you expect a mid correction or a deep correction if you're not quite in tune with the order flow and the overall flow of things? Well, use the ratios. You know, if you get to the 27, you know, use the ratios as a guide. If you get to the 127 and price corrects from there, you could expect a deeper correction. And if you get to the 138, you can expect more of a mid-level correction. And if you get to somewhere close to the 1618, then you can expect a shallow correction. So you can use this as an overall gauge to help you understand what kind of a correction you should get. Okay, but again, that's not an absolute. That's a subjective component of our analysis that we have to tie something objective to it, right? We expect this kind of a correction, but the liquidity is here. The liquidity is the objective part, okay? Because all analysis, you know, pretty much all analysis is subjective, right? It's what we think based on our skills as to what price should do. Or if you use indicators, the indicators are telling me this, so this is what will probably happen. All of that's subjective, okay? You need to find the objectiveness of price action and price movement to help you turn some of that subjective reasoning into objective processing. So we said that there was some liquidity here. We see the sellers come in, the buyers come in and push price higher. Here, the buyers try to come in again, the sellers come in. So there's a liquidity area here that's not that big. The sellers attracted, defended it from below that price may respect. We'll see. We know we are in oversold territory. We know projection is increasing. We know momentum is increasing. We know that there's strength to the downside. We know that that should give us an expectation of a shallow correction right now. The liquidity is somewhere in the middle. Okay. So we just have to be patient. And unfortunately, we got taken out here. It would have been an amazing trade. Probably would have been taken out, in all honesty, somewhere around here. Because the trailing strategy has me trailing here, and it would have been below this candle, then this candle here. So this candle right here would have probably taken me out. So although we did not get a winning trade here, you were able to see the processing and the transition from long bias to short bias based on nothing more than what price achieved and looking for the area of liquidity. Did price turn in that area? Well, there's two areas close to each other. You know, the answer to that is, you know, yes, it just took a little more orders, right? Because enough orders have to be filled to create the imbalance to move price. Sometimes there may not be enough liquidity in this area. The sellers did not attack this area at all. They attacked it, you know, this area up here. So I'm happy about this trade, even though I got taken out. It lets me know that I'm in tune with the chart. I'm in tune with who's running the show. I didn't let this fool me or bully me into looking for longs. Why? Because the expectation had not failed. Why? Because the strength that appeared to be here and appeared to be here evaporated, and then the buyers were just unable to defend any of their zones. Probably because overall, you know, look how many candles it took to go up versus to come down. They got overwhelmingly absorbed and they had nothing else to work with. They had to start that absorption battle from scratch. We didn't know that until after the trade failed. But once we knew that, we aligned ourselves with where the market was going. So I want you guys to pay particular attention to that the market does give us insight. The bar by bar, the price action does give us insight into what the market's looking to achieve. Our job is to time our entries in accordance with what the market is likely going to do. And depending on what your stop is, you need to be more or less accurate on that timing, right? Like I'm trading with 50-point stop on a market that's has so much energy like we see these days. A 50-point stop is nothing. From an intraday standpoint, it makes all the sense in the world, right? But as you can see, if I would have taken 3 losses here, to give you an example, 50, 50, 50, that's 150 points on 3 losing trades. And the winner would have went the distance and it would have been taken out somewhere around here is 210. How it just doesn't matter that you take some paper cuts here and there. But you have to get on that. You have to eventually get to a point where you're winning, you know, more than half of these trades. Because even if you're not, you're still going to make money. But it's not about making minimum wage. It's about making, you know, living off of it. So overall, I'm happy with the 50-point stop. It does force me to be a lot more accurate, though. Something here, Ashok says, not taking long before price fits is 555. That's iTorque. iTorque is Ashok. He's a friend, somebody I've been working with for a while. So we see price is trying to respect that area that we identified. We can see, and I want you guys to, you know, to kind of be able to pinpoint this because this can help you depending on what your strategy is, you know, where these corrections are likely to take place, right? We identified this area, price respected it. We identified this area ahead of time, price respected it. Price tried to respect that and failed, pushed down. We knew that ahead of time. Okay, what's the next level? Well, we have some ratios and harmonic exhaustion here. Price should be exhausted here, oversold. But oversold doesn't mean price can't drop another 300 points, right? It just means that the market should, you know, the buyers are now should be given an opportunity to be able to come in and absorb some of that. But in the absence of structure, liquidity must be sought and liquidity areas will win. So how did I identify that? Look left. Where is it? Sometimes the information is subtle, sometimes it's obvious. We can see that sellers produce a really nice candle here, and then we have a candle that tried to come in, did not trade below, it's open, didn't really achieve rotation, but that's absorption. Then the sellers came in to reabsorb. And then the buyers came in, and the sellers had to, selling pressure, that's selling absorption. And then we have a really, really tiny candle here, right? That has a really nice close. That's an overwhelming amount of buyers came in there compared to the previous one. That's really strong buying absorption. Does that mean it's going to win? No, but it leaves a footprint on the chart that there is buying liquidity there, and they took it. A lot took it. Okay, it just unfortunately didn't go anywhere. The next candle followed up on that. And then the sellers produced their own kick-ass screw you candle, absorption of their own, price went on down. But what happens when price revisits that area? Price has memory, right? They know where it is, okay? And the sellers came in. Look what happened when price got back to this area. The sellers came in to try to absorb again. Then the buyers reabsorb. What does that mean for this area? It's going to fail, okay? Same way we looked up here, okay? Same way we looked over here. Same way we determined this area will probably hold. The buyers had to defend this area. Why? Because they have before. Why? Because there's liquidity there. Why? Because they got money trapped up here that they're going to want to rescue. When is it cheapest for them to get it? Now. It was cheaper here, but they couldn't find it. Did they try? Yes, they did. Look at that. But the sellers reabsorbed it. That's how we were able to determine this area will probably fail. Not to mention the expectation put price past that. Do you see the value? Do you see how this is not hard and how this can help you navigate certain boundaries and certain landmarks that price should either respect or get past. So what has changed as far as my decision to enter in the area that I want to enter? Nothing, right? That's where the liquidity is. Will price get there? I'm not sure. What does that look like? That looks like slightly past the 50%, somewhere near the closer to the 618. So what's the right swing here? Is it from here to here? Well, it doesn't really matter because they're really close to each other. But what's the main swing here? The main swing, okay, it's right here because this one is the main swing and this one came all the way back here. So this is the retest lower high, okay? And if this had not made a new structure low and this was higher, you would have to use the other one. If this had not made a new structure low here and we had a retest, okay, then this whole thing would have been the main swing. Okay, right now the proper swing is this one, and I told you it was past the 50, close to the 618. That's exactly where it is. That's where the liquidity is. Let's look left to make sure. We have here, here, and here. Is there relative liquidity up here? Yeah, there absolutely is. Is that where price ultimately going to turn? I have no idea. And then based on my order flow expectation, based on what I see, this is the area that price should at the very least try to defend. We're approaching that with what appears to be strength. Is that real strength? Not necessarily, right? Because the sellers don't need to defend any of these areas and there's very little selling liquidity there. So therefore, what may be strength is just an area that does not need to be defended. So now we're getting to an area that the sellers, where they're selling liquidity, as we can see, they're trying to take advantage of that. How do I know that? All I need to do is look left. Look over here. Selling pressure in all these candles and a win. That's selling liquidity that got taken up and price respected. Okay? And that's exactly what's happening here. There's also buying liquidity a little further down. Okay? So let's see how that plays out. On the immediate one, where is the liquidity being taken advantage of from a shorter term? It says price has memory, right? It doesn't have long-term memory, it has short-term memory, especially on the intraday standpoint. Where is that evident in the most recent price action? Well, right here and right here. So that's where I want to put my limit order. I'm not going to put it down here and say, okay, well, I see some there. The liquidity that was taken advantage of today, that liquidity was here. So chances are the price will visit this area. I just have to be patient. And if I don't get filled, I don't get filled. Are you guys seeing it? Are there any questions? Am I talking too fast? Am I talking too technical? I need your feedback. This is for you. I don't need any validation. I just need to know if you guys are following it, if you guys are seeing it. What do you want me to explain a little better? The important thing here that hardly any indicator, I'm not gonna say indicators suck, they have no value, okay, but their lagging nature will almost always have you chasing price unless you really know how to use them, and also will never have you two-step ahead of price. I'm also a pilot, so it's extremely important as a pilot to stay ahead of the airplane in the multitasking and in what phase of flight you're in. It becomes really critical to understand what you need to prioritize and to stay ahead of things so you don't become overloaded with tasks that you need to accomplish. Indicators have a habit, to have you falling behind and not allowing shit. Got taken out. No big deal. This is probably where price is going to turn. 50-point stop is very, very tight. Let's see here. I'll dial it back a little bit here. I may not, this may be the area, but I'm not going to chase it, You're going to see if price comes up a little deeper. Again, I don't mind the paper cuts. Let's adjust this area here. See, the only indicator that I think is noteworthy is the volume profile, not to be confused with the market profile, which I believe is time-based. I have messed around with it a bit, but still prefer just price action and drawing tools. Okay? I'm not here to bash indicators or anything along those lines, but you know, developing those price action skills should give you where price is likely to go to and from and to correct. So we may have another situation here where we got taken out by a couple of points and price may continue on to its expectation. So don't focus on that. Focus on the, determining the areas, but you have to draw a line somewhere, right? If you're trading as an intraday trader and you are, you have these gigantic swings, as an intraday trader, you may be seeking 200 or 300 points, as these swings are all that big, but you cannot expect that to be the norm within your trading session. It doesn't make sense to take on, a 200-point hit as an intraday trader. Now, if your profit targets are consistently, 300, 400, 500, you can maintain that one-to-one risk reward or better, then that's fine. But that's not the case these days. It really isn't. So you need to have a trade-off. And the trade-off is, okay, your zones usually hold. On a day like today, these zones tend to be a little bit wider than 50 points, and that puts my stop in a vulnerable area. You don't want that, but because, you know, overall the rain rate is there and the risk reward is there, it doesn't really matter. So I don't stress it. You know, some days or you're gonna have a few days you're gonna get chopped up like this, and you know it may lead to some emotional whatever, right? You're stuck in the mud, a little frustration. No, just like you can string some of these, you'll string 3 or 4 winners, and it's just like trading with the best peace of mind in the world. You know, the term that Patrick coined for me is keeping the math in your favor. It's just a beautiful thing. Patrick is a good friend. He's a price action trader just like me. He trades very similar to me. He's been following me for a long time, and we trade a lot together. There's a couple of you guys here that we've traded in the past together too. So we're just going to be patient. Now, is there an emotional need to say, "Oh man, a 50-point stop on a day like today"? You know, it needed to be 70 or 80. You know, look, I mean, I got taken out here by a few points. You got taken out here by a few points. Look, you've missed, wow, you know, a bunch of points here, and it looks like you're going to miss a bunch of points here. You know, why don't you make your stop 80 points today? Or why don't you just make it 100? That's what today requires. The answer to that is no. That's an emotion trying to sneak in and trying to make you make decisions that avoid pain outside of your trade plan. That is an uncalculated move that your emotions want to help you make that are going to cut into the risk reward. They're going to cut into the overall profitability of your methodology. Okay, the answer to that is, are those emotions there? Yes. I'm like, shit, I should just move. I'm on a live stream. I should just make it 80 points, and you know, I would survive all of these. The areas are wider today, you know, but no, it's about having big boy pants on and say, this is my trade plan. This is my stop placement. If I get chopped up, I don't care. The risk reward is there. And one good trade here is going to erase these last 3 losers. And am I wrong? No. Am I aligned with the market? Yes. Okay. So nothing's wrong. Press on. Am I against my trade plan today? Am I reading the market wrong? No, I absolutely am not. You know, I looked for a short here. Where did the market go? I looked for a short here. Where's the market going? You know, what do I expect? I expect this area to fail again. Is it likely to fail? Most probably. Why? Because there's a lack of liquidity there. There's some. Did price correct there? Yeah. Where did it correct to? You know, where do you decide where within this main swing you have to look for that short, right? Because that is the expectation. You have to look for the liquidity. Based on the momentum, based on the projection, close to 1618, you were expecting price to come back to the 38%, right? Shallow correction. Is there liquidity there on the selling side? No. So guess what? It needs to go deeper. It went to the 50%. Was there strong liquidity there? Yeah, a little bit here. Nothing great, right? But look, the sellers got interested. The buyers came in to defend, you know? So where was a slightly stronger liquidity? Right where today's footprint was, right there. Just so happened that we got pushed back a little bit and my stop was vulnerable and boom, got taken out. But can you see and appreciate how we use subjective processing, right? Our analysis is subjective, and then refer to the chart and the price action to find the objectiveness and create a synergy or a confluence factor of subjective to objective. That helps us identify really good timing on our entries. The timing here was good. It's just that my stop was the issue. The timing here wasn't the best, but it was decent, right? We didn't get ourselves bullied into here. And remember, resistance, support, resistance is not a line, it's an area, okay? And sometimes price comes back. We can see that the order flow here, pardon me, let me cover this because it's important. You know, price came back, oh crap. Price came here, price came here, right? You say, oh, price comes back to structure, right? Structure. No. Sometimes you'll see that only if there's liquidity there to fill the orders. If there's no selling liquidity here, price will not react there. Okay, that's why I always tell you guys, where are the sellers? Where are the buyers? That's where the liquidity is. That who are you looking to join? The sellers. You need to look left. Where is that? Well, there's some here, and there's some here. Okay, where's the strong? What was respected today? This area right here. Okay, price had to visit that area. There wasn't enough here. So don't fool yourself into, oh, pullback, continuation, pullback to structure. No, there's only structure there if there's selling liquidity there. If there isn't any selling liquidity there, guess what? Those orders can be filled, okay? So keep that in mind, okay? I'm not telling you not to care about this. I'm telling you is to take your time to look left and ask yourself where that liquidity is. Okay? Because that's where those orders are going to get filled. They cannot be filled otherwise. It is impossible. If there's no liquidity there, they will not get filled. Okay, super, super, super important. Okay. Look what that did to my area of interest looking for a short here. Look at the strength, right? You would say, oh, price is hardly going to correct. Price is going to react to this area right here. No way. Where's the liquidity? Up here. Where did it go? Up there. Same thing here. We determined that this was going to fail. It did. We determined this area is probably where the correction was going to happen. It did. We determined that price was going to come back into this area. It did. And now price is likely going to get past this area and make a new structure low. Without me, again, two beautiful trades taken out by a few points. Am I upset? No. Should you be upset? No. Well, you may be upset if you followed me today and traded with a 50-point stop, but I don't care, and neither should you. Because it's not about that. It's about aligning yourself with the strength and participating. So buyers are trying to make a move here with a nice strong absorption. Let's look into that. Okay. Do we have an opportunity here to get short again? Yes, we do. You know, might be we have a messy Gartley pattern possibly setting up here that will complete somewhere up here where my entry is. Let's use Brandon's little tool here that he made for me. So for those of you that are into harmonic patterns or may want to get into harmonic patterns, it's easy to draw these incorrectly. People tend to force them into price action. So this is where you see it's a Gartley here. We have a correction into the 618 to 786, correction on the downside to about the same area. And then the price correction area, or Scott Carney will say the PRZ is between the 78.6 of the XDA and the 127 extension of the A to B, which is up here. So this is this area here. Okay. Is price going to get up there? Maybe there's liquidity there, but based on what I see, price is just going to probably continue lower and press past this area. There's not much structure here to probably force a correction. And although the buyers tried to defend here, they really did nothing here. You can see that they absorbed here and really absorbed here. And then when price revisited that area, nothing. And now the buyers are forced to defend this area, and the sellers are the ones that are absorbing. So more than likely, this area will once again fail, like this one did here. We can see a somewhat of a similar situation that we had here. They may look a little different, but you can look at an area and say, okay, this is an area of support. Should we see the sellers attack? No. So should we be seeing selling pressure in these candles? Should we see the buyers not being able to hold on to any of the candles that they fight for here? No, they're getting absorbed. It's that simple. It's not a mathematical formula. You can learn to see it in the candles. This is no longer a qualifying garbage. Erase that. Let's see how I can. There. This is already unqualified. As you can see, it got past the tolerance threshold for that pattern. When you've been doing this for a while, you can sort of see this without having to draw them. We'll see if this area has anything left in it. I think it will fail, but the buyers may surprise us, may force a correction from there, and then we may be able to get aggressive and look for a short somewhere around 270. In fact, I'm going to bring my order down to there now, right around where I originally entered. I can see that the sellers are very willing to absorb these levels down here, which means they're definitely going to defend their higher levels. And it would be unreasonable to expect price to get past as high. In fact, it may not even get past 719 on a rebound, but we'll see. Trigger data lagging. Need to redo. If any of y'all are missing fingers or don't know how to type or anything like that, feel free to turn on your mic and ask your question. That's fine. Don't be shy. So right now, had we survived this stop, we would be getting to a break even. Trade will be somewhere around 170 points. We'll see if the buyers have anything left and if we can get filled here. I think I'm missing stuff. I just keep hearing little blings and beeps. I just don't know. I don't see any questions. I don't hear anybody. Oops. But one of the things that I want you guys to be able to see is how we were able to stay 2 steps ahead of price every single swing. And we were able to determine with a high degree of accuracy how deep these corrections were likely going to be. You can see that by my limit orders. Unfortunately, my tight stop, I was a victim of that here by, let's see, 95. It got to 05. So about 20 points there. And here it was at 811. So by 11 points here. So by a few points, we were chopped out of these 2 trades. But that's not the point. The point is the accuracy, stay ahead of price, how no indicators, how nothing that I use today to help me stay ahead of price and to understand what my areas of interest were and how accurate those areas of interest were. So you think we're all good watching? Good. Okay. So, and that it's okay to get chopped up, with your stop. I do this, all the time, and I don't care whether I win or lose. I care more about being right than whether I win or lose. I know the winners will outweigh the losers, so I don't care. I know that I'm right a lot more than I'm wrong, so it doesn't matter. So it's important for you guys to feel the same. You have to believe in your process. You got to have a process that's repeatable. Okay? You got to have a process that's not subjective, because if it's subjective, then it can't be consistent. Nothing subjective can be consistent, but we can find, although our process starts out subjective, right? It's what we think. We then correlate that to what price is likely to achieve. We create that confluence and we turn the subjective part into more objective reasoning and processing. And then once we're in the trade, it turns 100% objective. Well, in order for you to take an action, and we may or may not get into a trade management situation here. We've been stopped out every time, but if we do, price has to achieve something. Price has to test the low. Is this a test of the low? Yeah, this candle is the low. This candle is the low. Did price test that? Yes, it did. So price test the low. Okay, so what does that mean? Break even plus 5. Okay, it does not mean, oh, I have 800 points. A break even sucks. If that's the case, and you have provisions in your trade plan that says, okay, if price comes back to the 38% of that correction, right, I will then lock in 50% of the distance, boom, then that's something that's not subjective. That's something that's subjective. Price has to achieve something for you to take an action. And if you have the discipline to follow that, then now you have an outcome that you can measure, an outcome that you can expect, an outcome that's either consistently profitable or it's not. And the time that it's not, or the days that it's not, like today, oh, 50 point was too tight. Let me just forget about the 50 point stop and try something else. No, nothing is 100% and nothing's going to work great every single day. What does work great is my processing of the chart. What does work great are my areas of interest. What does work great is I can stay ahead of the price of price action by 2 swings. Every expectation leads me to the next 2. New structure low. What do I expect? Lower high and another new structure low. So now I know that I need to be short here, and I expect this area to fail. Boom. Is that going to happen? Maybe not immediately. Price may have, issues getting past this, and it may take time. They may have some complex corrections. Price may range for a while. It doesn't matter, but it is expected to fail. Tom says, I got to go to work. Thank you. This was incredibly great stream. Hope we get your stream often. See you. Yeah, I mean, I don't have a problem doing these often. Okay. Again, now, did price make a new structural low? No. Did price test a low? Yes. Is price coming back? Yes. Is there an opportunity for re-entry? Yes. Where's the liquidity? Well, somewhere where it was. It's here. It's here. Is price likely going to get back there? I don't know. Maybe not, right? The buyers did come in and the sellers did attack here. So this is an area that the buyers must get past or else it's game over for them, right? Does that mean I need to get overly aggressive and get here? No. Why? Well, because nothing's really changed and the buyers are fighting to defend this area. Why would I get short here to have issues here? Do I have room to protect? Do I have room to do anything? No. Is my stop vulnerable? Extremely. So you know what? Just be patient. Let price come to you. Don't let price bully you into a bad trading situation. Is the trade here in my trade plan? No. Is the trade here in my trade plan? Yes. You guys understand? A seasoned trader has patience to let price come to him. Especially if you're getting chopped up. What you're failing to realize is that, especially when you're getting chopped up, you got to be patient here because you're wanting to make up those losses. Your emotional need to make up those losses, those emotional needs to see what you want to see and not what's there, may lead you into taking a trade here. And guess what? You're already emotionally stressed about these insignificant losses. What do you think is going to happen the moment you get into this trade here and price does push down and then you see the buyers try to come in here? You're going to be a wreck. You're not going to make good decisions. And why wouldn't you expect the buyers to come in here? Is that expected? Are the buyers expected to defend down here? Yes. Well, why would you say that? You're telling me that this area is expected to fail. Yes, it's expected to fail. Okay. But the buyers right now are consistently defending this territory. And as a result of that, it may force a deeper correction. Again, is the liquidity here to fill massive orders to create the imbalance? No, not really. So if the sellers are eating up some of that liquidity here, it's going to make it easier for them to get passes on the attack, right? Doesn't mean it's going to happen right now. Definitely don't have the risk reward. If I enter here, my stop is going to be here. Where's the stronger liquidity? Here, here, here. Don't do that to yourself. Okay? Take trades on our terms, on our rules, in our confluence areas. Price tends to follow the path of least resistance. So what happens when you only have one thing there that tells you you should get short? Now, if that's the only thing you have and your trade plan says you need to get short, well, then you need to get short and be patient. You know, but if your analysis tells you the liquidity is slightly deeper and is within that, you know, main high or low, and that's where your order's got to be. Now, on the flip side of that, you may have, to give you an example, let's pretend that this is a new structure low and the lower high is here and the strongest liquidity is up here. You know, you may have an expectation failure here on the short-term order flow because the liquidity is there. Okay? And if there's no liquidity there, then it's just not going to happen. Okay? So understand that some of these expectation failures were happened because there was a lack of liquidity. I say that so you can understand that. I'm not saying that so you can then play God and say, no, there's not enough liquidity there to take my trade. You're trading frequency to reach expectancy. 70% or better, okay, is a huge number. Imagine somebody with 70% of their teeth missing. That would be a horrendous sight, wouldn't it? Well, don't trade against that. Have I traded against that? Yes. Has it worked out? Sometimes. You know, but that's not the way I normally operate. There has to be other factors that would make you take a trade like that. Like an unbelievable risk reward, like a crazy area of structure. You know, but the correct thing to do is to, if it's not in my trade plan, I don't care about it. Mr. Pip, would you please talk a bit about bar by bar analysis in layman's terms or some real life analogy to get more clarity? Sure. It seems easy to understand, but need a bit more. Oh, hey, Robbie. Yeah, no problem. So, like we said earlier, while we're waiting for price to either come back here and fill us or not, let me just take a look at the liquidity again real quick, please. Give me a second. All right, we see we have here an attempt to come in. We got to ask, right? Price is coming back up. This is our main swing. We cannot, you know, if it's going to cause you to get lost, I want you to either draw a line or, you know, draw some fibs, somehow identify your main swing so you don't get lost in thinking, oh, you know, the expectation failed when it did it. Yeah, I'm happy with the liquidity there. I mean, that's the it's a stronger area. Price starts accelerating up here. I may bring it up a little bit more towards where price did ultimately turn around, because I will put my stop slightly vulnerable again. But this is where I want my order to be right now. All right, so bar by bar. All right, we know that every single one of these candles has the same amount of transactions. So smaller candles means balance, larger candles mean imbalance. All right, so what these candles represent is information as to a battle, you know, 377 point battle between the buyers and the sellers. Each one of these candles is a battle in time or in sequence or whatever you want to call it. So when we see price come into an area of resistance or an area of support, what would you expect to see? Okay, and how is that represented in the candles? So as price will come into an area of support, we would like to see more buyers coming in, right? So we have large range candles. We would like to see them getting smaller as it gets into support, right? Because that will indicate to us that buyers are coming in. Okay, like on the selling side, we like to see the candles getting smaller, and we can see with large range candle. We have a large range candle here, pretty good range candle here, pretty good range candle. As we get into the area of resistance, we see we have more inside candles that stay within the confines of the previous candle. We tend to see smaller range candles, and then eventually you see a transition from a buying candle into a selling candle. Okay, so that contrast is what you want to see, to let you know that yes, the area is being defended, or no, the area is not being defended, it's being taken over by the other party. So what do we see here? We see a really good range candle compared to the previous one, and we see that the sellers came in to push that back, create some selling pressure. The candle held a little less than half of its overall range. So to me, that tells me that there is some buying pressure there. The sellers tried to come in and absorb it, but they weren't necessarily successful. Okay, but did they come in? There are sellers at this level. That's fantastic. Great. Do I expect that? Yes. All right. Then the next candle comes in. Okay, trades below its open, produces a really decent range candle. It's an inside candle, so it's not great. It didn't make a decision. Well, it kind of did, but we won't talk about that right now. And the candle did push lower, and then the buyers came in to push back, create buying pressure here. This is an absorption candle by the buyers that closed near its high. This is a really good absorption, okay, by the buyers. Okay, so although the sellers came in, they didn't come in force, and they didn't come in to overwhelm the buyers. You're able to appreciate that here in this candle. Now look at the next candle in contrast. Okay, when we compare and contrast, look at the range of this candle compared to this one. Okay, look at how this candle did open here, did trade a little bit above its open, didn't really trade above any of this candle here very much. And the sellers came in to push it back, absorb the buyers here, and it did trade below its open, and they got pushed back very little. So this candle is a really good absorption candle by the sellers. Okay, so although the buyers tried to absorb here and they couldn't, that was intent by the sellers. The buyers tried to absorb them here. This is good. The buyers want to take price higher. Okay, the next candle should, if the buyers are going to overwhelm the sellers, it should be another absorption candle on the buying side. But it's a 180-degree contrast in size and in achievement by the sellers. So this is a significant selling absorption followed by another one. The correction is very likely to take place here and now. Unfortunately, I got taken out before that. Are you able to kind of understand that? Likewise here, price is coming up. The sellers try to come in and attack. Look, the sellers produce really nice absorption here. The sellers try to reabsorb. They're really not able to. The buyers don't absorb here. They just stop the selling absorption. Okay, then the buyers come in here and produce a really nice absorption candle, followed by another absorption candle. But look at the range between this candle and this candle. What does that mean? Sellers are coming in. Were they able to absorb? No, but they came in. So they tried to absorb here, and the buyers had to put money in to reabsorb that. And then the buyers do create the absorption that ultimately leads to the correction. So what does it mean for this push up? Well, the sellers are trying to absorb early. They definitely have tried to absorb here at the low. They definitely absorbed here. The buyers reabsorb, the sellers reabsorb. So there's an absorption battle going on here. And it's costing the buyers a lot of money just to create this correction. Okay? The sellers are again trying to absorb right now. I don't see this getting very much deeper. Does that mean I want to get overly aggressive and move my stop down? No, the liquidity is there, so I just need to be patient. Are they wearing them down? Can this lead to early imbalance and price movement to the downside? It absolutely can. Okay. but we are able to see that. And because of this fight, because of this, the sellers, trying to absorb the buyers on the way up, what does that do to the momentum of the correction? It weakens it, it flattens it out. Look at this momentum versus this one. This one's flatter, okay? A lot more candles in this one, okay? So if it's causing you issues to correct, then it is unlikely you're going to cause an expectation failure, unless they just give up and they want to sell a better pricing up here. Is that likely going to happen? It's unlikely. Anything is possible, but it's unlikely. Okay. So if you're waiting for a price action trigger to get into a trade and want a decent price action trigger, this is a decent area where you would want to do that, right? Prices pull back into the 38% of the main swing. The sellers have been consistently involved here, consistently tried to absorb the buyers. The buyers have been, trying to reabsorb them, and they've lost the battle here, right? We have an attempt to absorb by the sellers here, a buyer's attempt to reabsorb that does not produce any price action above any of the previous candles within this sequence here, from here, right? And then the sellers produce a nice range candle here, producing a rotation and absorption. The buyers are in a really weak state right now, and it's costing them a ton of money trying to push price higher. But there may not be enough liquidity here to make that transition. Okay, and now look at what's happening here. Okay, so my stop is in a slightly better place. Let's see if we can get price to cooperate this time and get us a win. Wasn't expecting these two candles here. Does that mean anything? Maybe, maybe not. Did we talk about the possibility of the sellers giving up and letting price get to the better area, the strongest area? Yeah. Does that mean I want to drag my stop up? No. See what happens. Be that unlucky? You guys are probably going to laugh at me if I get stopped out again. Oh, Lord. I don't care. So, but Mr. Pip, Damien, my God, how can you not care about losing money? I don't care. It's not about losing. It's not about winning. It's about decision making. Was I right again here? Was I taken out by a couple of points here? Maybe, maybe not. We'll see. The takeaway here for you guys, other than, how can this seasoned trader be chopped up like this and not move his stop? That's the difference between a seasoned trader and a newer trader that just wants to avoid pain. It's not about avoiding pain. All right, Asha. See you, man. So, was the bar by bar helpful? Did that help you out a little bit?
Yes, definitely. Thank you.
My wife turned on the AC. What's going on
You can
here?
hear
Hang
me,
on.
right?
See the AC. All or the AC at 76. Crazy.
That's good. Thank you, Damian.
Huh?
That's good. Thank you.
Okay. Yeah, so unfortunately, we're getting chopped around here again. I'll move my order up here as I can see that in my actions here of where my limit order was, where I felt the sellers should respond and take up, I don't see any action there. Okay. So they're probably more interested in taking price up here. Does that mean that if price closes above this, there's an expectation failure? No, this is our main swing. Okay. Does it bother me to take a trade above the 78.6? No, that's where the liquidity is, and it offers better risk reward overall, right? Has anything changed? No. Okay, so where's the 1-to-1? This is a D entry aggressive C sell. You know, it's no longer a Gartley pattern, but it's a messy one. Price is not closed below this. Let's see if we can get filled and if this is the one that ultimately goes and we are able to erase all of these little losers with that one trade. It would be cool for you to see, that way you guys can understand the power of risk reward. Any other questions, guys? Anything you guys want me to talk about? Robbie mentioned bar by bar. Is this in line with what you guys thought was price action trading and price action skills? Processing the chart from a price action point of view, having a process that's reproducible. So we determined that price should correct from this area again. So I had my limit order there. Is price trying to correct there? Yes. Okay. Will price correct from there? I don't know. I expect it to. So if that doesn't happen, that causes a adjustment that needs to be made to the strength and weakness. Does that mean that the buyers are ultimately stronger than the sellers? Not necessarily. It just means that there was not enough liquidity there at the time at that price level to create the imbalance. So they had to go a little higher, as we can see that here. And then the buyers came in again with a really, really nice candle. So is this strength? Looks like strength, right? It looks like a really great absorption at an area of resistance, right? Okay, what's next? We see a bunch of sellers coming in. They don't absorb the candle, but they do create a little tiny absorption, followed by another buyer attempting to absorb, and they getting pushed back. And now we can see the sellers are absorbing and moving price. So again, we were correct about the area. We were just off by a few points. I think something that was challenging and I still struggle with is sometimes finding the most accurate speculative confluence. All right. Let me process that. Speculative confluence. Okay. So I don't like to use the word speculative because it kind of is indicative of a gamble, a chance that you're taking in a specific area or of a series of circumstances. I like to target areas of high probability. So my areas of interest are high probability. Okay. They revolve primarily around, who am I interested in? Selling? There's got to be selling there. Selling absorption, selling candles, selling rotations, engulfing candles, you know, whatever you want to call them for you Japanese candlestick guys. Because if there's no selling liquidity there, then I'm sorry, it's just likely not going to happen. Is it impossible? No, nothing's impossible, but it's likely not going to happen. So any area that you're looking to take a trade in has to have the liquidity that you're looking for. If you're selling, you're looking for selling liquidity. If you're buying, you're looking for buying liquidity. Price has to visit these areas because who moves the market is big money, and big money doesn't enter with 5 contracts or 10 contracts. Okay, and if there is not enough liquidity at that price level, it's going to be filled over an area. And yes, I know some sellers came in here. Why? Because this candle is bigger than this candle, and this candle is smaller than this candle, and this candle is about the same, but a little smaller than this one. So I know that there's sellers coming in here, to take up that liquidity. It just wasn't enough. And then when they did find enough orders in here to fill them, then they created the absorption, and then they got some follow through on that. And then the buyers tried to come in, and then they got reabsorbed. Okay. So what does this tell me overall? That this zone has value to me, that I was correct about this zone, but there's not enough to create that imbalance. Are the sellers still interested? Yes, they are. They attacked, they re-attacked. Now the buyers are trying to defend again. Okay. Is this calculated? Is this calculated by the buyers and the sellers? I don't know. I know that the sellers don't have enough to create imbalance. So what do they need to do? They need to let price get to this area so they can attack again. That may mean that they may not defend these candles. If there's liquidity there, they're going to try to take it. If there isn't, they're going to wait until price gets higher. Does that mean that this expectation is going to fail? There's definitely an opportunity for that to happen, right? It's a very deep correction. At that point, it will be a complex correction, not something we would have necessarily expected. The shorter term order flow, an immediate order flow is emerging that produce a new high, but it's still within the main swing, which is gigantic. So all these things add complexity to a situation that you may be telling yourself that then becomes a speculative confluence, right? When you take yourself outside of the parameters of your process and add other things to it, I think that is what you could call speculative confluence. Because when you're looking for confluence, you're looking for 1, 2, or 3 things that consistently happen in a specific area, and that's what turns the subjective into objectiveness, and that is the confluence that you're looking for. So I think speculative confluence is when you have those things, or when you're missing 1 or 2 things, you try and pull in other things to add confluence or to add value to your decision making that are not inside the parameters of the type of confluence that you seek. That may be what you may call speculative confluence, if I needed to define speculative confluence. Does that help? Does that make sense? Yes. Okay. Good. Um, see if the buyers have anything left here. If the buyers show weakness coming up here, if they're able to come up at all, and I see little candles and I see a lot of selling pressure, I will bring my order down to this area right here so I can participate. So we'll see. Let me get some water. Be right back. Oh, look at that. All right, notice again, unfortunately, I got taken out by maybe, let's see, 10, 13, by 3 points. Story of my life. Anyway, this is not the norm, guys. It just happens to play out that way. But again, it doesn't matter. What's more important to me is that we made a determination that we needed to look for a trade in this area. I'm sorry, let's start from the beginning. We needed to look for longs around here. This was the best area of liquidity that should have held. Did it try to hold? Yes. Did it fail? Yes. Did that make us push short? Yes. What is the area that we were looking for? Here. Where did price go to? Here. Same thing here. We were looking for shorts here. And then we were looking for shorts here. Has price reacted consistently? Out of the 4 opportunities that I was able to take today, 3 out of those 4 were magical. Unfortunately, my tight stop, I was a victim of that today, and not putting my entry a little more, spaced out. Doesn't matter. I don't care. What's most important to me is that I was able to stay ahead of price, anticipate almost every single one of these turning points with accuracy. We even determined that this was going to fail. We determined that this was going to hold. We said, it was likely going to fail. It didn't really, just pushed a little lower. Then the buyers got their act together. But we expect ultimately this area to fail. I also mentioned to you guys earlier that, just because we expect this area to fail doesn't mean that this area won't hold temporarily until it eventually fails. It absolutely would, and that's what we're seeing here now. So notice that, I was able to stay ahead of price. I was able to understand what areas were likely going to hold, which ones were going to fail. I was able to determine where these corrections were likely going to take place. We looked for trading opportunities in these areas and we took them. Okay. Unfortunately, we were stopped out by a few points on all of these entries, with the exception of the first one. But that's not the point. The point is that I was able to navigate price action with efficiency, with accuracy. I was able to determine what areas were going to hold, which ones were going to fail, without the use of indicators or without the use of anything that was magical. That had to do with just understanding the framework of price and how price moves. And this adds tremendous value in your decision making. I don't want you to trade like me, but I do want you to get better at processing a price chart. And it doesn't matter whether you trade the YM, the NASDAQ, the S&P, Tesla, Cocoa Puffs, oil, soy. It doesn't matter whether you trade the moon. A chart is a chart. The information is the same. Every candle gives you information. Empower yourself to learn to read the chart with accuracy. Empower yourselves to put the odds in your favor. Okay? Think about the math in your trade plan. That doesn't mean quantum physics or anything along those lines. It just means risk reward. How often am I right on my decision making? Okay, now I need a risk reward that gives me positive expectancy. Because if you win 10% of your trades, you need to be right 90% of your time to break 90% of the time to break even. You understand? Unless the risk reward is amazing, and then it doesn't matter that much. Now you can be 70 or 60% accurate. Okay, figure out the math behind your trade plan. Figure out if you're behind the curve. Because if you are, then it is impossible for you to make money. You're just beating yourself to death. Okay? And you're going to be broken, maybe forever. Okay? And your career is never going to take off. Okay? Trading profitably is not about a strategy. Okay? Because what good is a strategy if you can't follow it? You're fooling yourselves. Okay? Learn to process a chart with accuracy. That way you can look at your trade plan with honesty and with skill and say, okay, my trade plan is full of crap. I need to make some changes. Now I need to test these changes to see if they are consistently profitable or if they have a positive expectancy. Okay, let me see here. I say speculative because I don't want to brag that I am awesome, but sometimes awesome. Well, I'm never awesome. I just get lucky more than I get. I'm lucky more than I am good. All right, so let's see, Rush. And struggling with why you would compromise the structure of your system by compromising your stop location. I remember videos and streams where you preach the importance of the stop location. Why would you not choose to scale down micro positions uh, that real easy, that real easy now, due to the massive market moves and maintain your historic system, which has been very successful versus the 50-point stop, static stop. Okay, so Rush, to answer your question, as from an intraday standpoint, I understand the swings are gigantic, but it doesn't make sense for me to have a 300-point stop or a 200-point stop from an intraday standpoint. I understand what you're saying, and you're partially right, but as you can see, I was taken out by a few points on each one of these, and that's not the norm. That's not the norm. It just happens to be the way things played out today. Maybe today, because I wanted to get Phil, I was a little more aggressive with my order placement. I don't know. I definitely wanted to get into trades to show you guys trade management. But more important today, don't focus so much on the 50-point stop. Don't focus so much on the 4 losses. Focus on the overall areas of interest and how accurate they were, how right they were, and we were able to stay ahead of price. Because of the risk war, because of my accuracy, the 50-point stop hasn't been a huge issue for me. Has it been a frustration? Yeah, on days like today, you could say that it is frustrating to be taken out by a few points here and there. And it's very easy to say that I'm just going to put my stop where it needs to go. Yeah, but when you're still developing the skill set, when you're still developing, that framework of how price moves, of where your orders need to be, until you get accurate with those turning points, yeah, the stop should go where it needs to go so you can participate in the frequency to get to the expectancy. Now, is there a room for me to say, well, let me go back to this, let me look at this again, from the standpoint that my entry needs to be above the zone. Like if I enter here, my entry needs to be above that zone. That's definitely something that will give me more room. But I have learned that recently that when my 50, with the exception of today, that when my 50-point fails, it fails by a few hundred points. So it's not worth for me to avoid that little hit to say, God, let me just add 80 points or 100 points. I'll put the stop where it needs to be. Because it just with these huge swings, it just doesn't make sense to do that as an intraday trader. I'd rather take advantage of the risk reward. And since February that I've been using the 50-point stop, I've been trading in the 60% percentile, and the risk reward has been 2 to 1 or better for the most part. So it's been hugely insignificant that these little hits are taking a negative toll on my account. They're just taking a negative toll on my win percentage. But the math is overwhelmingly in my favor, and I'd rather have that peace of mind that it's just a small little paper cut, and one trade is going to overcome 3 or 4 losers. It's not a frustrating thing at all. In the last week, I will tell you that I have been chopped up a little bit, but like yesterday, look at yesterday. We looked at that earlier. Same 50-point stop. I was taken out here. I was taken out here by a few points, and then price moved up here. Doesn't matter. Then I was looking for the short. The market had already spoken. So why would the market, if the immediate order flow has spoken, why would I put my stop so far away when price has already spoken that things are changing and things are going to change, and stay that way? Notice how, going back to today, that could have had me, it would have saved me here. It would have saved me here. It wouldn't have been an issue today, but sometimes when you're looking to participate in a short-term order flow, an immediate order flow, and you put your stop way up there, the immediate order flow is speaking to you, and it's telling you that that's a trade, and that immediate order flow is 100 or 200 points these days. As an intraday trader, you need to take advantage of those points and just say, listen, I'm going to take the small cut. so I can change direction and not get caught up in that, if that makes any sense. You know, yeah, I took a small hit here. I could have taken an even larger hit. Instead, I put myself in a position to participate for the short. And unfortunately, you know, we don't care about that. But it gave me an opportunity to take a small hit here and readjust to the change in the market, as opposed to waiting for price to take me out down here somewhere at 115 points, double the loss unnecessarily. So part of my evolution, getting back into day trading more as opposed to, you know, longer term trading, was understanding, you know, that the immediate order flow leads the way, and I can accurately pinpoint these turning points, you know, and because of that, I can put myself in a position to participate more often and collect more points. And I'm able to do that with tighter stops. But when there's energy behind the market, a 50-point stop is nothing. Does that mean you need to readjust? No, the math is in your favor. Don't worry about it. Press on. Does that answer your question? I think that your skill set needs to determine how much room you need to give your trade, and as your accuracy and your timing improves on your entries, then you can, you know, revisit that. I mean, not been caring about the range, and if my stop falls within that range, do I leave it there? Yes. Can I go back and do some testing and see, since my zones are pretty deadly for price action and price restriction for awfully? Can I make that adjustment? Perhaps I could, and I'm going to look at that because I haven't been chopped up like this in a long time. So one day's outcome should not be a quest for, you know, going down the rabbit hole again. But yes, my win rate has dropped into the 60% because of that tighter stop. You know, but you know, think about it. And this, under these market conditions, with this much energy, with these large swings, that I can trade effectively with a 50-point stop for 3 months and be somewhere in the 60 percentile with a 2-to-1 or better risk reward, is that pretty amazing? I think it is. I think it is, and I enjoy that peace of mind. It's in our natures to want to change or make changes to painful situations. A loss should not be a painful situation unless you fail to follow your trade plan and you got a loss as a result of that. Then it should light a fire in you. And that fire should be to follow your trade plan, not to make a change. Okay? The takeaway here is, I expected the market to turn here. It did not. The market spoke. We needed to look to the opposite side. Did I look for a correction here, here, or here? No. Did I pinpoint the area the price was going to correct? Yes. Did we predetermine that this was going to fail? Yes. Did we predetermine that this was going to hold? Yes. Did we position ourselves in an area where price was going to correct back to the downside? Yes, we did. Okay. Was it accurate? Really accurate. Okay. Not a point or two accurate, but, you know, accurate. Price did turn in that area. Okay. Did we determine that this area is going to fail? Yes, we did. Has price failed yet? No, it hasn't. What is the expectation for this area to still fail? Is that still a possibility? Yes. Has the sellers shown us interest, will, and intent to, and capability to push price lower? They displayed that here. They wanted to. Okay. They didn't have enough. The buyers defended. Did we tell ourselves where price was likely going to turn around again? Notice we didn't say, well, because it tested low again, now price is going to come back halfway or whatever. No. We determined where that was likely to happen. Where's the liquidity? Up here. Did price achieve that? Yes, it did. Is price still pushing down now? Yes, it did. That is the takeaway here. That is a skill set that you need to build. And then once you can read the process of chart like this and understand what these turning points are going to be, now you can put yourself in a position to create a strategy that has a very, very good chance of being profitable. Okay. And even then, okay, once you achieve that, once you can, determine within an area of 50 points or where price is going to turn, which is pretty amazing because, they say price action is random, right? All the gurus say that, the charts are completely random and there's no way you can anticipate any of this stuff. Well, I've just shown you differently. And time again, year after year, all of you that have followed me have been able to see that, okay? So it's not magic and it's not impossible. It's just taking a set of skills, developing them and then polishing them, okay? That polishing action never stops. Every time that I step onto this chart to trade, okay, I'm processing every candle. Now, for me, it's effortless, and for you, it will take time, okay? But you can't just sit here and wait for price to get to an area to then process, okay? Because now you're playing catch up. You need to stay ahead. You need to stay out here somewhere, okay? Can you have an expectation from right now? Yes, I expect price on this little order flow here. This very immediate order flow is producing lower high in the structurals. I expect the buyers to come in somewhere around this area here. I expect the buyers to try to defend this area. And I expect price to maybe come up from there. And I expect the sellers to come in somewhere around here. Oh, Damon, why would you say that? Well, look at the buying absorption here. Let me blow it up for you. Okay, look at the buying absorption here. Look at the sellers trying to absorb. Look at the buyers reabsorbing. Look at the sellers. Look at the buyers. Look at the buyers. Look at the buyers. Look at the buyers absorbed here. If the buyers have anything left, they should defend this area. Look at the buying pressure in this candle. They're trying to. Okay, but what has price produced? A very immediate new low here. Okay, so what does that mean? I expect a lower high and a new structure low off of that. So a lower high will be somewhere where did the sellers come in? Right around here. So I already have, even from this, okay, the next two little moves from here are pretty much, figured out for me. And if price gets through this area, then what do I expect for them to defend here? Okay. But overall, why do I expect a new structure low? So if they're not able to correct, I shouldn't be pissed off about that. But this is where it would make sense for them to do that. So can I have that expectation even from the most immediate things? Yes. Yes, I can. How does that help me in a trade management situation? Well, I can use those skills to what? To trail if that's my strategy. I can trail on those short-term areas that I expect to hold or fail and lock in profit along the way. Leaf asked, why do I use hard limit orders instead of waiting for a rotation candle you like, if you used to do that previously? Leaf, great question. And the answer to that is very simple, okay? I used to require or need a price action confirmation before I challenged myself to get better at the bar by bar, to understand what's happening within these candles. And I don't mean orders, I mean like who's absorbing who. I rather place my entry in the area where the highest concentration of absorption happened. I find that my entries are very timely. I find that they are very accurately placed, usually within a couple of points, which is not the goal. The goal is to get filled. But, when you wait for a rotation, sometimes, like for example, in here, if I was looking to get long for whatever reason, and this is the area of liquidity I've identified, if I wait for a rotation candle, my entry is here. Now my stop has to be bigger because now my stop should not be within the confines of your entry candle. That sucks, right? So waiting for a rotation candle is going to give you a less favorable area. When you start understanding that these zones should hold or fail, or that those zones are likely to be defended and that your area of interest is almost always respected, like it was here, here, and here, sometimes waiting for that rotation candle gives you a very expensive entry that really cuts into the risk reward. So I say that until you develop those skills, you definitely use a price action trigger, whether it's an absorption candle or a rotation candle or a combination of candles. I would definitely tell you that until you develop the skills to really understand where that liquidity is and where the orders are going to get filled, I just want to participate because you may not always get the rotation candle. It may come late and it may be very expensive, and then you're hesitating on that entry because now you say, oh, now it's too expensive to take. My stop is, in a less favorable area. So that's the reason why that is. And then sometimes when you get a rotation candle, you get slippage on the fill because it happens on momentum, and by the time it closes and you press the trigger, it gets even worse for you. And sometimes it gets a little better. But I don't really need that price action trigger because I understand which zones are likely to hold or fail. I will, however, not because of today, but because it makes sense to do so, to look at, placing the stop on the other side of these zones, since the zones are almost always respected. I will look into that. And Patrick is probably saying, yes, finally, the knucklehead listened to me. He really hasn't said that, but he doesn't do that. He just uses a percentage of risk versus what a stop needs to be, and then he adjusts his position size, which is very smart. But I've been challenging myself since I'm, sorry, this is a little bit of a joke and a little bit of ego here. Since I'm a Jedi, and I'm personal friends with Yoda, that I will make the 50 point stop work for me. And it has very well. I enjoy the risk reward. I enjoy the peace of mind that it offers. But you know what? It does make sense to go back to look at these rectangles and to put the stop on the other side of that. It absolutely does make sense. And on the day like today, it would have saved every single one of these trades, with the exception of this one, which is fine. Okay. When you see something consistently happening to you, if you're consistently getting chopped up, okay, then yes, it makes sense to look at that and to see if you're ridiculous with your stop. It's a 50-point stop in a day under these market conditions, a little bit ridiculous. I don't know. Maybe I'm demanding a level of precision that's just a little hard to capture these days because of the energy behind the markets. But I've been able to. I've been able to do it consistently. But we'll see. I think that it does make sense to go back and to see, putting the stop above these zones, how it plays out. I think the answer to that preliminarily is that it's going to be very good because my zones are almost always respected. We talked about the buyers should be able to defend this area. They tried and got absorbed, and then we talked about this area possibly holding. That's the one that's being defended now. See, all you need to do is just look left and to see who is likely to do what where. That doesn't mean that they're going to win or lose. It just means that they're likely to do that. Now, if they do that, it adds value, right? So if the buyer is able to defend this, then you know what? They want to stop the sellers. Are they going to be able to? Probably not. The expectation has already been determined for us, right? So, but it's nice to sit here and be able to identify this even on the most immediate scale, because if you can do it accurately within this, then you're definitely going to be able to do it on a larger scale. Because remember, the skill is the same. It's just on a different scale. Okay. Now that the buyers should have defended this, right? This was easier for them to defend, right? There was consistency here. They were unable to. They got eaten up here. The sellers are willing to spend the money. What do you think they're going to do down here? They're going to do the same. So now the buyers should have defended this. They were unable to. So the buyers are definitely should be able to defend these lows. Guess what's going to happen when price gets back here? Does that mean I'm going to do this? No. Okay. So, just because price is not in an area that you're willing to take a trade doesn't mean you can't work on your craft. You're sitting here in front of the chart, right? So take the time and polish your skills. Try to figure out what kind of candle you should get next. Figure out who's going to defend what, and how that translates into you making a adjustment to your strength and weakness assessment. The market is overextended as of late. Market is hard, but I like your approach. It's correct. Keep doing what you're doing. I will absolutely keep doing what I'm doing, man. Thank you. Just because the market is overbought, it's funny because, I see a lot of retail traders, and I don't get tons of PMs anymore. I did get a bunch of PMs in Forex Factory, but I could never answer any of them. So I'm done with Forex Factory. But You know, I get a lot of people tell me, oh, you know, look, the market's oversold, but it keeps dropping. Well, just because it's oversold doesn't mean it can't drop, you know? It just means that the market, when you feel, okay, think about it from a logic standpoint, you know, when you feel a market is overbought or oversold, what does that mean to you? You know, what does that mean to you? That the market's going to, and I hate the word, reverse? You know, don't use words that bring drama into the equation, right? Reverse, crash, you know, those are huge words that add drama to the situation unnecessarily, right? The market corrects. Every turning point is a correction. Could be a correction in line with the expectation, be a correction against the expectation. Every correction against the expectation is expected to produce a lower high or higher low. That's it. Whether it's shallow or deep, that depends on liquidity and your overall order flow analysis process. Okay, that's all. Okay, now the market has produced a move here, has closed at its low. We hardly see any buying absorption here. I doubt the buyers will be able to get anything going. If they do, we'll be down here. I don't think that's going to happen, so I am willing to move my entry into the next level of strong absorption. That may not even happen. It may be here, but this is too early, too close to the fire for me. At the end of the day, desperation is desperation. The buyers may throw an atomic bomb here and try to throw a Hail Mary pass up. Okay. So, and if I don't get filled, I don't get filled. I'm not here to chase price or care about what price ultimately does. Okay. We determined ahead of time that this area would fail. And despite all of this, has that changed? No. Have I changed? Even when price is coming down here, even price is up here, I told you guys, the expectation is the expectation. But where were we? Oh, overbought or oversold. Just because the market is overbought or oversold, what does that mean to you? To me, I'll tell you what it means. Possible exhaustion. That's it. Possible corrections. It doesn't mean definitely try to find a long or short because the market's overbought or oversold. No. It just means expect deeper corrections because the market is exhausted. And exhaustion could lead to deeper corrections or complex corrections. Overbought or oversold is just exhaustion. Every swing achieves overbought or oversold. Every single swing. It is our jobs to try to understand that and say, okay, well, what does this mean? It just means a correction is probably close at hand. It just means that if we do get a correction, it's likely going to be deeper because there is exhaustion. And even that is subjective, right? That's the subjective part of our analysis process. Now we can tell ourselves, okay, I expect a deep correction. Where is the liquidity that's going to fill 500 contracts or more? Oh, it's here. That's mid or shallow. Guess what, guys? You could expect what you want to expect, but liquidity is liquidity. That's what moves price. Do I need to prove my point? Look, price came here. Look, price found selling liquidity here. Price came here, found buying liquidity here. Right? Price came here, revisited selling liquidity. Look what happened. We saw this. It wasn't strong, but look, it was strong enough to take price. Where was the selling liquidity? Well, it was more down here. They didn't have enough. They needed to move higher to consume that. Okay. Then price came back here. Where's the buying liquidity? Down here. Where did price go? The sellers tried to defend their liquidity areas. Yes. But the stronger liquidity is what going to make the difference. Okay. Now price got back here. Look. Price got here. Look. Why? Buying liquidity. Buying liquidity. Then selling liquidity. Reselling. Okay. Buyers tried because there's an attempt there and then nothing. Okay. But you can see that it's not that support and resistance works. Most people look at support resistance incorrectly. It's about understanding where the liquidity is. That's where the support and resistance is, and it's not a line. It's an area. Okay? Your area of interest has to have that most basic and most important component in it, or you're going to struggle with timing. What did I tell you? Price may get here, and that may be it. But I'm not going to chase price. Look at that. Price got here. And look, the sellers immediately started attacking. Does that mean that this area can hold and they're not going to get up here? No. But I have basic expectations about the immediate area that I'm in, right? Why? Because I'm here. Why? Because the skills that I'm using here is the same things that the same exact skill that I use to determine this, to determine this, to determine this. It's the same skill that I'm showing you here. It just doesn't make me take an action because I'm not looking for a trade there. That doesn't mean that I can't work on developing these skills, that I can't work on processing these smaller areas. Value? You guys understanding the method behind the madness? The process, despite of emotion? I'm here to follow my trade plan no matter what? That I don't care how the market makes me feel, that I don't care that I've been chopped up today? I am here to follow a process, and the process is good. And not every day is going to be gravy. And that even today, I have no emotion one way or another, that I don't care about this. Okay. And my interest in going back and reviewing these zones has nothing to do with what happened today, because I have an overall, I'm not going to tell you what my turn rate is, on my account, but it's pretty remarkable, and it's over the last 3 months, since November, December, January, February, now March, 4 months. It's been crazy with a 50-point stop. So, it just doesn't matter. Now, is it worth looking into? Because, yeah, it does make sense from a price action standpoint, from a zone standpoint, that your stop is on the other side of that. Yes, it absolutely does make sense to look at that. But every opportunity that I get, sometimes I sit here in my office watching, whatever on TV or whatever, and I have my charts open and I'm just not trading, but I'm processing. Always. It's a never ending process for me. Why? Because my goal is simple. I want to be the best technical trader on this planet. And who am I competing with? Myself. No one else. Myself. I want to be able to anticipate every single one of these turning points within reason. Have I been able to achieve that today? Yes, I have. Do I care that my 50-point stop was very vulnerable today? I don't like it, right? But that just means that my timing was slightly off on my entry. Was I maybe overly aggressive with my, entry placement because I wanted to participate in trades today so I can show you guys trade management? Maybe. I can't answer that realistically. It's a possibility. But I did not make that decision consciously, so I can't sit here and fool myself. And that's the way you guys need to do with your back testing. Don't fool yourself and say that was your high or low, that was your high or low. No, you want to do things properly. You do this. This is how you practice. If you don't know how to create this margin, you right click on your chart, you go to properties, and here, right scale margin. Put it to 180 and then save it. And that's how you create that margin. And you start going like this. Okay, new structure low, great momentum, increase in projection. I expect a shallow correction. Okay, where's the liquidity? Well, there's some liquidity here. Okay, did that liquidity win? No. 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 Yes. Okay. Is there liquidity further up that consistently won that if I need to fill 500 contracts, I'll feel comfortable putting my limit order there? Okay, remember, all these big boys, they trade on limit orders. They don't necessarily enter market orders. All right. Nice. Nice. Garbage. Nice. Nice. Garbage. 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 Really nice. Really, really nice. Where's the liquidity? Up here somewhere. Okay, but I got filled earlier. Okay, I gravitated towards the earlier one. Okay, and notice how price didn't really react to that one. It reacted a little higher because it was a component of some of the liquidity that was here, a little bit that they picked up here maybe, and some of it they picked up here eventually created the imbalance. Okay, then we determined that this would hold. And then that area is going to be revisited, right? That's where the liquidity that made the difference, and so on and so forth. This is how you make the expectations to the right side of the chart, and then you move price forward to see if you were right or wrong. Okay, and the sellers are attacking early, and the sellers are absorbing, and the buyers are trying to absorb. If that battle is being fought here, what do you think is going to happen here? Sellers are going to definitely come in, right? They spend the money here. It's more expensive for them to sell here. It's easier. It's going to be more favorable for them here, price wise, right? Here, they're selling at wholesale, right? You want to be a wholesale trader. You don't want to be a retail buyer or retail seller. When you go to the store, do you want to pay retail or do you look for the sale price? Right? We want to be wholesale. We want to enter where the big boys are entering. So when the retail traders are entering, we're already in a risk-free position. They're looking to buy here. Why? Because of support. Well, what in the world will tell you this area is going to hold? The retail trader looks for a buy there. Why? Because the market's sold. And what other lies are they telling themselves? Oh, this is a double bottom. Oh my God. Oh, this is it's not a head and neck, whatever you guys call it. Oh, this is a double bottom. Is it really? Come on. What is a double bottom? Bottom bottom means there's no more bottom. That's it. This is absolute. Well, look at this. Is that a double bottom or a retest? Guys, don't use dramatic words. Don't use words that make you think that this is a bottom. What is the bottom? The bottom is absolute, right? There's absolutely no way that price can get on below the bottom, right? When you walk on the bottom, it's the bottom. There's just no way. So you're creating a false narrative. You're creating a area that you're telling yourself price can't get past because it's a bottom. It is not a bottom. It's a retest. Every area, unless it's the absolute high or low of the market, can be a double top or a double bottom. Everything in between is a retest of an area. Start using terminology that's appropriate. Start using terminology that don't bring dramatic thought processing into your mind, because what is that? Emotion. And what is the enemy of good decision making? Emotion. Okay? Look, every time I get into the battlefield, every time I trade, don't you think after this happened and after this happened, I didn't have the emotion to say, "I'll screw it. I have a gigantic account. I can put my stop way the hell up there if I want to. I want to show these guys that, that is right." No, I'm giving you the wrong lesson. I'm being a hypocrite. I'm not teaching you properly. Okay? It's not about getting stopped out here, getting stopped out here, and getting stopped out here. Okay? It's about understanding what price is likely going to do before it does it, and in the area that's going to do it. And we were able to do that, amazingly well today. Even the areas that did not have much structure, we were able to understand. So now this area is developing as an area of what? Demand. So why do I call it demand? Well, it's not like here where it's resistance and price got above and this and that and got above it. Before this happened, this would have been an area of what? Supply. But price got past it, so it's no longer supply. It's no longer bulletproof, right? So as price consistently finds supports here and the sellers are unable to get past it, that is their expectation, to get past it. They failed on one attempt, and they haven't been able to do it on a second attempt. Does that mean it's going to fail? No, it just means that area is developing a stronger area of support. The sellers have not been able to get past that. So what is that? That is an area of demand that is developing. A stronger area of support or resistance is an area of supply and demand. All right. So in light of that, Doesn't mean we need to make any changes. Doesn't mean we need to do anything. The area is still expected to fail, but maybe this is indicative of something longer term, stronger area of overall support or resistance. Does that matter to me? Not that much. Why? Because of this. Price blew through it like it didn't matter. Price kind of respected, then blew through it like it didn't matter again. So is this area that strong? No. But in context to what we're doing, in context to our, our trades here, our, processing of this structure area, it tends to be a stronger area that the intraday price action has consistently respected on a few attacks, and therefore it is a stronger area of support, which I like to call demand. Make sense? Have you gone through the tutorials or some of the same things that Mr. Pip talks about? This is the way I like to trade. Good section. This is being recorded. Yes, I've been in and out all point. I think it's being recorded. Yes, Johnny. Move it up just a little bit more. And if I don't get filled, I'm okay with that. So what am I seeing? I'm seeing this little area here that I'm particularly interested in. This is a buy area. I was confusing you. Let's get rid of it. We're not looking for buying. That's another thing that you can do. If your areas, you can end up with a bunch of rectangles here. The ones that you're not interested in or don't matter to your process and may add confusion or doubt, eliminate them. I drew them for you guys to see. This area right here is not that important to me right now. The more important area is you see how things all of a sudden clarify. You erase a lot of these rectangles, things become clear. Where's the selling liquidity? Between here and here, it's multiple levels. But right now, I care about this swing. We're correcting from this swing, who did close lower, but has not made a new structure low. So, where is the liquidity? We know the sellers defended earlier. We know they defended here. The buyers defended too. We are really nice buying candle, but that's only because the sellers did not need to defend it. So why put money where you don't need to, right? Money is efficient. Now price got back into this area. Maybe I would have gone and filled if I wouldn't have moved it. I don't remember now exactly where my entry was, but it's fine. Now things become clear. Where are the sellers between here and here that made a difference? Here. Yeah, okay, no big deal. Yes. And yes. So you're looking for the yes. Anything else? Any questions? You want to keep going? You want to quit? Uh, Nothing. Talking to myself. We'll see if we get filled here. It's almost quitting time. I don't like to work overtime unless I'm providing some value to you. We'll see if we get filled here, manage this trade, and then call it a day. How's that? Whatever's in your chart that has no purpose or function, get rid of it. Keep your charts clean. Damn, trademark, you needed a coffee refill. Am I that boring to listen to? Damn. Crushed. Shit. I'm doing great. I don't know. I'm a losing day here. You guys gonna think I suck. I don't know what I'm doing. No. We should win every day, right? Wrong. We need to make good decisions, guys. That's all. Takes jumping. Oh, we got filled. All right. So let's see what happens. Let's see if this is a trade that breaks the camel's back. Boy. Maybe I'm cursed today. Maybe it's my, this is what you get for not doing live stream in years. All right, so now we're in trade management mode, right? Until our stops gets taken out, we're in trade management mode. So, you know, how do we handle this? Well, what's our main swing? Well, main swing is right here. So we're going to draw extensions of that. Is it unrealistic to expect that within the rest of the day? No, it's not, but it's a tall order, right? We need to get past some areas of support here. Buyers are fighting. So let's see. Let's also identify this swing. So why this swing? Well, this is the swing that we're correcting from. Set a minimum goal. Here, okay? See if we can get some follow through to the downside. Now, I also have to be smart enough to know that the liquidity that made a difference was up here. Where's my stop? Vulnerable to that. Do I want to put my stop above that? Of course I want to, but I'm not going to. Am I expecting price to get up there? No, but that's where it may need to. The liquidity, if they don't have enough to create the imbalance, they don't have enough. Am I going to re-enter again? No. That would be an impulsive decision. We get taken out, but 2 more points. And price goes down, that's it. No, just kidding. See what happens. So I'm just curious, and it may be personal preferences as the answer, but I've seen people use percentager for money management. Would it make sense to do that with a larger swing? That way it looks, it locks in the same stop, but would allow you to put the stop above instructions. Well, yes, like I said, Patrick, a friend of mine that trades with me often, he does that. He figures out what a stop needs to be in points, and then he determines a percentage risk of his account size, and then it tells him, well, to risk this much, your stop needs to be, instead of 5 contracts, 3 contracts, because your stop needs to be bigger. He does that. That's something you can definitely do, and it makes sense to do that, especially if you have a smaller account. And you can create a Excel spreadsheet that will help you with that math. And you just enter where you just go with your cursor and say, oh, my stop needs to be 200 points. Okay, so there's 2%. Then, then I need to trade. I trade, well, if you're trading micros, I guess it'll be 50 cents a point. If you're trading, regular, it's $5 a point, and it'll tell you how many contracts you need to trade. It's a simple formula that you can plug into a spreadsheet, and it can do it for you. We can do another one of these in a couple of weeks if you guys want, and and I'll still post my trades regularly here, my chart at the end of my session, so you guys can see the progress or the chop fest like it was today. If I make the adjustment on the zone, then I will let you guys know. I'm not sure. I mean, today it doesn't look appealing, but I have been enjoying the 50-point stop, and those that trade with me regularly, then you would see that know that this has not been the situation. I haven't had this happen to me since I started using the 50-point stops. And we could chop a trade or two, but usually we find one or twos. And look here, I mean, this could have survived. This one could have survived. This one definitely could have survived. And it just, but on a day like today where they all get chopped, it makes you think a little. And the fact that, I'm under the microscope with you guys.
Ven aquí otra vez, Luis. ¿Qué es? ¿Qué voy a hacer?
Definitely makes you want to,
¿Qué quieres?
say something. But
Yeah.
I'm not going to say
¿Qué puedo
anything because
hacer,
there's
Luis?
nothing to be said other than, looks like my
¿Dónde vas
plan
con
is
esta máquina?
no big deal.
Send me some shit, man. I need those Cheetos.
I need a cheeseburger. You need Cheetos? I need a cheeseburger. So we'll see if we got this area right. Right now the buyers are fighting. Is it their area to fight for? Look left. Yes, it is. Here, here. Did it do good from this level? Yes. Yes. We'll see. If price gets above this area, has the expectation failed? No. Should this area hold up here? Yes. Can we make an adjustment to the area in light of what price has done? Yes. We can make this adjustment. These zones today have also been very wide. They typically are more narrow. Today is, we're talking 40, 50 points. So yeah, usually I'm entering in these zones, and the stop is usually, I rarely have seen stop inside the zone. I remember seeing that consistently. Let's see. And this is why I rather take the small hit on an intraday scale, because, man, if price, I felt the seller should come in here, and I put it above the zone, and look at this. Price comes up here to pick up liquidity here. Do I, what if it doesn't? What if it takes me out? Do I want to, as an intraday trader, does it make sense to take almost a 200-point hit? I don't think so. I don't think it does. I think it's unreasonable to do that. I mean, are you averagely taking 200 points on these winners? No, you're not. You're taking 100, you're taking between 100 and 200 points consistently on these winners. When you win, you know, it's between 100 and you know, and sometimes it's a break even, you know. Does it make sense to take a 200, almost a 200 point hit? No, it doesn't. Not when you can pinpoint turning points like this. You know, today's just one of those days where the 50 point stop was a little vulnerable to the range or to these areas or to my wanting to participate to show you guys trade matter. I don't know. I'm not going to sit here and make excuses because excuses don't solve anything. Should price be here right now? Absolutely not. Is price going to challenge and get past this expectation? It's definitely challenging it now, but let's see if we can answer that question before it actually happens. You know, look at the sellers attacked here. Look at how the sellers defended early. Look how they got eaten up here. Look how they were unable to do anything here. This is the area that's the strongest area for them to defend. They were unable to do that. The buyers came in very early. Now look at this. It looks like the buyers may screw the sellers here. We're in a complex correction on huge momentum. Okay. We're attacking this area with strength, and we need to see sellers come into this. You know. Let's see here. So I'm just curious, and maybe personal preference reaction, I think. Okay, we talked about the percentages. Let's see. Wider zones has been caused by news. I listened to TOS Global News, and it's been insanely busy. Yeah, I mean, that's true. There's a lot more volatility in the market because of the news. That's the only thing that I consider noise. You know, a lot of retail traders or a lot of people don't understand price action. They use the term, well, you know, that's a 1 minute chart is filled with noise, or a 5 minute chart is filled with noise compared to a 15-minute chart. It absolutely is not. There's no such thing as noise. Noise is the inability to understand, comprehend, or process price action relevant to that scale. You know? So is the 377 tick chart going to have more price action than the 610 chart? Yes, but I'm also looking to highlight or to bring out a shorter term order flow that I'm interested in taking advantage of. So is it noise or is it price action? It's price action. I'm looking to take advantage of something, so I need that extra information. It's information, it's not noise. I think noise is news. News is noise. And why is news noise? Because it can be interpreted in different ways, right? What may be good news to you may be bad news to me. And if my interests are at play, then my interests will prevail because I have more money to spend than you in this particular investment opportunity, right? So news is the true creator of noise. And yes, it adds volatility because it feeds emotion. News is the fuel that feeds fear and greed. Nothing more, nothing less. And the market's still going to do what it's going to do. It's just going to do it quicker. On rare occasions does news have a profound impact on price movement that holds the test of time. Am I right or wrong? I don't want anybody to challenge me if you think I'm wrong, and we can discuss it. We won't fight. I won't fight with you, I promise. But we can discuss it. You know, right? Sellers did nothing here, right? Where are they? They haven't been here. So what happens? The area will fail. Just can't hold. If you don't defend something, you don't absorb, you can't stop it. You can't change the course or the trajectory of price movement. It's that simple. You know, we did it in all these areas. This was expected to hold. The buyers attacked, the sellers attacked. They even attacked really well here. They were just unable to capitalize from that. And then they were unable to defend. You know, the buyers started, you know, taking it over. And yeah, this area should have held. but it didn't. Look, there's an absence of selling here. There's an absence of selling absorption here, and there's a overwhelming amount of buying absorption here. Sorry, there's just no way that that area can hold. Now you understand, how we can have an expectation of support or resistance, and how overall will that eventually hold or fail. Here, this was expected to fail. That's not the case anymore. It ended up holding. So what does that mean? Does it mean that we were wrong? Well, it just means the expectation failed, but now we can make a determination that this is a much stronger area of support than we expected. We already started calling it possibly demand. That has been proven, right? Violence, intent, will, expectation, failure. This area is becoming very, very strong. Can we refine the area a little better so it's not so wide? Yes, we can. And we can do it even further and say, down here, right? There's a tail here. There's a tail there. Down here, this is up to low there and there. So we can refine that area. Can we refine this area too? This area needs to kind of stay that way. This area has now failed. Can we refine this area? Since it was a selling area. Yeah, we can refine it. Does it make a difference? No. Does it matter to what we're doing here? No. Will it matter again if price gets back below this? Yes. But does it matter now? No. Is it an area of support? No. Understand? All right, Vince. Have a good one, man. That's why if I get taken out here and price moves with strength here, I'm not looking to get short up here. Why? Because price is not supposed to be there. Does it offer great risk reward? Yes, but is there anything in the way price approaches the area that will lead me to think that that area will even remotely hold? No. Was that even an expectation of mine from the short-term order flow? No. Price was not supposed to, this was the area that was supposed to hold. This was the area that definitely had to hold. So if those two things failed, strength has shifted sides. The buyers have found something that they shouldn't have found, and the sellers failed to take it back. That is significant. So you know what? Screw the sellers. So looks like we were wrong here. We were definitely wrong here. We were right, and right. Okay, I'm happy. I think we'll call it a day, and then maybe we'll do this in another week or two. If you guys want, and if you don't want, then we won't do it. And I hope this had value to you guys. I definitely enjoyed the session. I am not upset about this at all. It's just the way the cookie crumbles sometimes. I will say that I haven't been chopped up like this in a really long time. But I'm glad it happened here because it showed you how I did not make an adjustment that because I was stopped, chopped out, that I needed to increase my stop 30 more points or 40 points, things that are outside of my trade plan. No, it's just rinse, wash, rinse, and repeat. Wash, rinse, and repeat. That's all it is. All right. So thank you very much. It's always nice to have winning sessions, but it's even more valuable to learn to deal with losing ones. So I think that's it. I'm gonna sign off now. Stop this.